Are you being a big chicken when it comes to your retirement? Does the noise in the current financial markets have you with cold feet? Are you paralyzed to make those important next moves? Well, in today's episodes, we want to address the courage and the bravery that we need to embrace when it comes to our financial plan. All right, grab your favorite mug. It's time for coffee with your retirement coach. Welcome back to Coffee with Your Retirement Coach. Behind the clipboards today, I've got Nick.
What's up, Aaron?
What's with the hesitation? Don't be chicken when it comes to this podcast.
I'm feeling intimidated that Big Chicken's looking at me kind of funny.
Are you talking about like the one representing the Marietta Big Chicken or your coach to the right? Also with us today, leading us confidently across the road. Which came first, the chicken or the Randall?
Well, I think I came just before.
Okay, there you go. Yeah. Randy, I appreciate it. Hey, listen, being serious, there have been times in the past on the podcast we've addressed, like we've talked about the fact that luck is not a plan. Right. We've talked about how fear can disrupt our plan. But I really believe that in those moments, the economy was pretty good. And we had some things that were going on that we talked about a fear that some people I don't think were feeling. And I think in this moment with the volatility in the markets today would be a great time to readdress some of those concepts and package it in a moment where, as we've talked about, it's easy until you put your toes up to the edge of the road to decide whether you're going to cross or not. You know, we've talked about it.
Is that going to be a chicken joke?
I think it is a chicken joke.
The chicken. Okay, I got it.
But being serious,
I'm not going to do it. I'm not.
We've talked about the importance of finding that, wise professional. And then finding a plan that you're going to adopt the plan, remind yourself you have a plan and sticking to it. And I think right now that could be, more important than ever.
Well, Aaron, I think, the one thing that our audience today really needs to understand is that with more knowledge comes more confidence.
Yeah.
And I hope in today's episode, a lot of people are going to feel more empowered, more confident, because there's going to be something that we share today that might enable them to take important next steps. Like, what is the next best step for somebody to take? And while we have, a broad group of people listening in and tuning in, most people are focused on their retirement. So when we're thinking about that, I'd like for our audience to maintain in their mindset for the rest of the episode, is this the next right step for me to take?
Absolutely. Absolutely. Because we have had clients recently say, I might, delay my retirement. I might do some things differently. And it's like, wait, we had a plan.
A great plan should take everything in consideration. And I think that's where you have to have a competent direction. So, I kind of look at it like this. If I'm taking the retirement trip, I'm going from one side of the country to the other, and that representing my retirement. Then what I need to know is I've got a spare tire. I've got to know that I've got AAA. I've got roadside service. I've got assistance. I've got the right things in place. And so what we try to do as a firm is build a plan with all of these things like what's going on right now in mind. And so what we want to make sure that we do is we allow people, if you will, to borrow our confidence, which comes from long-term success in the marketplace, being that we've rode through this before. We've been across the country a few times. We've had the flat tires. We've seen the things. But what we don't want to do, and which is never a good idea, is function from a stage of fear.
Correct.
Because you don't make smart decisions. And so part of that, what we have to do is recognize when chaos is happening, which is on 6 and 11, constantly in the marketplace today. That gets a lot of advertisement, as we've talked about before. The eyeballs are on there. You can't be steered by every emotion. You can't be blown by every wind and doctrine. So if you've got a good plan and you've thought about all the things that could occur in your retirement strategy along the way, then that should give you confidence. And so we spend a lot of time helping clients understand that there's a game plan put in place, and that you should function when things like this are occurring. What we're seeing right now, the reasons are different, but the reality is pullbacks in the market are totally normal, should be considered all the time.
And Randy, these pullbacks happen under all kinds of different market scenarios, all kinds of different things going on around the world. So you're right. Like, the thing that's causing it might be different today,
Yeah.
but the commonality is there's always something different causing it.
Right.
So having that effective plan in place is really important. And I think about, just from a standpoint, we just had opening day, for baseball. And I think about, I've heard in the sports world, one of the most difficult things to do across all sports is to hit a major league fastball. Or that's one of the most difficult things in the world. So, imagine you've got a fastball pitcher who's just throwing fastball, 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 and all you're doing, you're going to face this pitcher. So all you've got your coach, your hitting coach out there, and they're coaching you on how to time that fastball. And next thing you know, you're up at bat, fastball, strike one, fastball, strike two. You're ready for that fastball to come again, and then he throws a curveball.
Right.
And that's kind of been the market reality that we've had, over the last, 15, 20 years.
So that was going to be my next question, Nick, because coaches, I feel like we need to touch on this. First of all, I love the analogy to the road trip, because if you don't know, if you're not from the Marietta area, this big chicken is a huge icon that before we had the Waze on our phone, the Google Maps that were accessible to us, we told everybody where they were getting.
Turn at the big chicken. Yeah.
But in opposite to the big chicken, there's also Chicken Little. And I want to talk about, is the sky falling? Nick, and I think that's where you're headed. Lead us into what is a current assessment of what's actually going on, and how should we allow, like what Randy was talking to us about, allow us to be educated about the current situation, but not blown by every situation.
Sure. Well, I think we have to come back to this understanding that it is not uncommon at all in positive years or negative years to be down even double digits intra-year.
Absolutely.
That's a normal thing.
Right. It doesn't feel great, but it's 100% normal.
Right. So it kind of going back to that baseball analogy, I mean, if you're expecting a fastball because, that guy throws fastballs, if you're expecting an up market because 75% of the time you're going to have an up market, sometimes you're thrown off by that 25% of the time that you have a down market.
Right.
And the challenge here is that you've got all these soothsayers with these crystal balls who are trying to tell you that this market's going to be a phenomenal market. This market's going to be in the toilet. It's going to be bad. It's going to be really bad. No one knows.
Yeah.
Well,
okay.
Let me mention something. So one thing I've heard over my career and still hear it today is, I understand that, Nick, but this time it's different. And what's interesting, that is so old that's been going on, that Sir John Templeton of Templeton Funds, he said the most dangerous words are, this time it's different.
Yeah.
Because in reality, these things, whatever the reason is, and there always is a different reason, they do pass.
Yeah.
And I think, again, the great news for people who have a plan in place is they do have the spare tire. They do have the roadside assistance. They do have the things in place, and that's by structure and design. So if you're thinking about retirement and you think you're going to wait because of the tariffs or the news anchor or, Squawk Box or something's going on, that's not a good plan.
Yeah.
You should be able to retire regardless of what's happening in the marketplace.
Right.
And if you're in a situation where you're not getting good advice on your major assets, like sometimes people wait, they've got a 401k, it's a large part, maybe even the biggest part of their entire portfolio or net worth, and they're getting no advice on it, and they've been invested maybe too aggressively or inappropriately for where they are without this consideration that within 16 months I'm going to retire, then you might have to make some tweaks and adjustments in your portfolio for the next 3 or 4 years to ride that out. But for those of you who aren't immediately in that situation and you're okay putting together a plan, even if you're still at work, even if you're 3 to 5 years away from retirement, you should begin to build a strategy to take this road trip. Don't wait till the day you're leaving to decide to put the map or get the GPS on.
Well, let's circle back around on that in a minute.
Yeah.
Nick,
the current events, of the day, I think that's kind of where you're headed.
Yes.
Right. So we've got today, being April 2nd, big day. What's actually going to end up happening with these tariffs? That, are they coming, going, better than, worse than? We don't know, right? But the reality is we're focused in, so many of us are focused in on what's going to happen. with tariffs and getting the bias from the talking heads on TV, that we're not taking a step back to realize that you might already have a plan in place that's going to help you navigate through some of those waters.
Right.
And I think the second thing is we have to come back to something I share all of the time, and that is the market thrives on two things: certainty and liquidity.
Yes.
And right now, we don't have any certainty. We don't know what car prices are going to be from Japan or Germany or from wherever. Like, we have no idea what a car price is going to be because of these tariffs going forward. So the market doesn't know how to price right now. You could argue that the market's already tried to price in tariffs, but I'm going to suggest my own opinion is the market is still struggling to figure out how to price a lot of this stuff.
Sure.
And then I think number two, addressing the liquidity, the Federal Reserve. I mean, they're keeping money very expensive. It's very tight. I made a term up the other day. I called it dry money. I mean, at the end of the day, it's very, very hard to access money. And when you do, it's expensive.
Yeah.
The market doesn't like those two things, but that's the environment we're in right now. And what Randy's alluding to is if you do have that roadmap or game plan, it's going to take into consideration the potholes in the road. It's going to take into consideration that maybe you need jumper cables because maybe your battery dies at a rest stop. I mean, it's going to take into consideration those hazards. And right now we're going through some hazards.
Yeah. Not to mention, we still don't know what's going to happen when it comes to Social Security benefits in regards to taxation or tax brackets at the end of this year. Interest rates are still a concern. So again, there are a lot of headlines that have people at a point where they might have that stall out. But Nick, Randy, you guys often share, and in such an encouraging way, because it can feel almost like disciplining it sometimes. But if we're spending too much time focusing on the things that we can't change, we are neglecting our number one job, and that is working on what we can change.
I can make a prediction. Do you want a prediction?
I do now.
Opportunity, excuse me. If you live in the South, you're dealing with some pollen right now, like
That's right.
I am. But opportunity mixed with difficulty. I mean, really, if you look forward to it, I think if we're 6 months out, nobody can really forecast what's going to occur.
Yeah.
But if life continues the way it has for all of my lifetime, is that during the chaos, during all of the frustration and all of it could be this, it could be that is invoked largely by the media, there's rationale. I mean, there's rational reasons to be concerned.
Yeah.
But in reality is winners win. You find a way as an organization, when things are changing, there's opportunity. And I think if your vantage point as an investor or as an advisor is you're looking at all the bad things that are going to occur, you're going to miss those opportunities.
Right.
So we have a responsibility and a duty to not let these little things derail the plan. We're trying to go from one side of the country to the other in our retirement plan. We already have to have that in place, as I said earlier, but along the way, you may find that, you find a better road, you find a better thing. And your job or our job as advisors is to help clients navigate that and give them confidence that they've got a plan in place and not let them get distracted by everybody who wants to sell them a product or a solution that locks money up or takes and distracts them, puts them on the sidelines with no reentry, as you were talking about.
100%.
This is the time when investors need confidence, not fear.
Yeah.
And I'm gonna just turn to the camera here for a second. I'm gonna give a buyer beware. Okay, right now, I think is one of the most concerning times for retail investors because you are being solicited like crazy. I want you to understand that we are product agnostic. We don't care what the investment solution is. It just should be the most appropriate thing for you. From a fiduciary standpoint, what is the best thing for you? And right now, there are so many product sales folks, many of them are selling you annuities with the guarantee that you can't lose money. They are preying on your fear. They are trying to take advantage of that opportunity today. And maybe with conviction, many of them feel like it is the best thing to do. Many of them could say, hey, this is what I think is the best thing. My only caution is not to do something that you can't change within a couple of years. Because if you're locked up heading into retirement, that is, for many people, going to be a bad situation. So just buyer beware.
Yeah.
Be careful. It's a dangerous time, in my opinion, to be solicited inappropriately.
It's a really great opportunity for people who are holding themselves as fiduciaries and are selling products, because fear is a great motivator to do something really dumb right now. And what we're saying is, you need confidence. And one of the things I've noticed about some of the things you were saying, Nick, we've all had clients come in, prospective clients, and what they've end up happening is they've bought into this in the worst of times, and they've locked their money up, sometimes for up to 10 years.
Yeah.
They can't get out. And then some of the product providers end up changing the rules, which nobody read the fine print. It's called the bold print giveth and the fine print taketh away.
Absolutely.
And
That's
when
real
they
talk.
end up, I've had people come into me and they say, I was told that this was the deal and that was I haven't made money in 3 years.
Yeah.
When the market has been up like that. So be very careful. I'm not saying that there's no place for some of these products. It's just when I think some of the advisory firms are coaching and training, and some of the parent companies are soliciting that their advisors use products that are really great for the insurance company or the industry, and maybe for the brand name of the particular company that they work for, but not great for the clients.
Yeah.
So being able to separate that, and here's a rule. If it sounds too good to be true, it's too good to be true.
Yeah.
And before you lock your money up into something for 5 to 10 years, get a second opinion.
Yeah.
Okay. And I'm going to give you a little guideline if you want to know what that is. And that is, if I go to the doctor and I'm having some pains or some situations, and that doctor doesn't do some lab work, do some diagnostic work, maybe take an X-ray or MRI, but just prescribes me surgery or some medication, I'm going to say that person is probably incompetent and I need to get a second opinion. And if I'm dealing in the investment world and I've got an advisor who's making recommendations of products and solutions without really knowing me, and one way to know that is, did they get my tax return? Did they go over my tax return? Or did they make a recommendation without doing any diagnostic as what's the best
really
product for me? So, and that would be true of estate planning. And again, we love working with estate planning attorneys, and sometimes it's a communication problem. But if I'm having an estate plan designed and my attorney did not get my deeds, my powers of attorney, existing ones, my investment statements, my beneficiaries, then I want you to know you may have great documents, but you still don't have an estate plan, because you've got to know this diagnostic stuff.
Yeah.
So don't be moved by fear, but with competence. And you need to know how to measure that. And sometimes, as Nick said many times, get a second opinion.
Yeah.
And so we are not afraid of second opinions. We think it's a good idea.
Absolutely.
We actually, as a firm, I think one thing that maybe be a little bit unique is we share what we actually do with the marketplace, with our clients, because we know that they can share that with other people. It's okay.
Yeah.
Other advisors can use the strategies and tools that we're doing. It's a free market. We believe in that. But the expertise really comes in the ability to coach and guide a client to make smart decisions. And they need confidence right now, not fear. And if people are selling you fear, scaring the heck out of you, you probably need to get a second.
Or how about this, Randy, just to tie on to that, helping somebody make a bad decision.
Yeah.
Because many people in our industry are people pleasers, Aaron.
Yeah.
Like we want people to be happy when they see us and feel good. And so if you come to me and you're scared to death, like, what do? I'm about to retire. This is my nest egg. I can't lose it. I mean, how easy is it to help you feel good? No problem. Here's a product that is going to guarantee you won't lose money. However, it's too complicated to talk about how it might make money, but you're tied up for the next 10 years. So I made you feel good in that moment.
Absolutely.
I feel good in that moment, but at what cost?
Yeah.
So here's the thing I want to talk about, because how many times when we meet with a client that is locked into a product like that, after they have us do the observations to find out what's going on and they tell us about how much they don't like it, it is almost always followed with an event. There was a death, there was a divorce, there was a bad business deal, and that's what led them to
a bad market.
Or a bad market.
Yeah.
And so it also can lead to other things. Now, it's not necessarily a bad thing when it leads to estate planning from those things, but sometimes the speed to which, because out of where, the prior, but we're going to live forever. Oh, we're not promised forever. We don't know our checkout date like we talked about. We still need to take the time to interview the competent professionals, get into the weeds to find out, hey, we're going to get the right documents with the right testamentary language to have what's needed for us. And let's transition into that, because another area where we can lose confidence or event, if it's taxes, it's too late. It's how are we repairing the damage, or like we've mentioned before, the score, the tally on the scoreboard. So
Aaron,
let's shift into those two areas.
I think one thing, if I'm looking at this as a professional, then I always think along the line of quit living the microwave life, the instantaneous results.
Yeah.
Investing is like farming, not like operating a microwave oven. And if you understand a little bit about farming, one thing is, if you want to improve the probability of success, it's diversification.
Yes.
You don't plant only one crop. Now, if you want the big win and you want to feel lucky, plant one crop, go for it. Okay. But then you got wind, rain, drought, pestilence, all these kind of things that can come in and destroy it. But the other part of that, being a good farmer and thinking about investing, is right now, if you feel like it's winter when it should be spring, I promise you it will change. Whatever season you're in, there's another season coming forever. So wherever you are, don't be moved by right now. If it's winter, you got to be thinking summer. If you're feeling good and it's summer, you got to remember winter's coming. A good advisory firm, a good plan includes all the seasons, and the seasons will continue to change.
Yeah.
When we bring in a new client, one thing I always tell them is, whatever season we're in right now, I promise you, if you stay with our firm and we earn your trust and we can help you competently move through retirement, recognize the fact that we are going to go through some bad days, or we're going to have those flat tires.
Right.
That is the nature, and it is normal. So we already have to take these things into consideration. So don't be moved, whether it's a television, advertisement, marketing, your gut, whatever it might be. Don't be moved by everything that's going on right now. Have a plan and stick to the plan.
And I think that moves really, that's a great frame of thinking, especially when it comes to our taxes. Right now, so many people feel good about their tax bill because tax rates are at historic lows right now. Now, I know people who are paying historic lows and still very, very unhappy with their tax bills right now, right? So you've got both ends of that spectrum.
That's right.
But the reality is, most people we talk to, they feel like they're paying too much in tax.
Right.
So what is it that we can be intentional about doing today when rates are low now to set us up for a scenario in the future when the seasons change, Randy, and tax rates go up down the line? What can we do today to prepare? In the Bible, I think about the feast in famine. The famine is coming. The famine, you've got to store up in the storehouse because it's coming. And so if we have a feeling a storm is coming, taxes are going to be higher in the future, our deficits through the roof, what are we doing today to protect ourselves so we're not the victim in the future?
One thing I would just think about that is, the fact of the matter is, almost everybody's concentrating on how do I save money this year in taxes, when in reality, last year might have been the year that if we were betting, because we didn't know what the outcome was going to be, that we would go ahead and take some capital gains, because capital gains rates are the lowest that they've been almost in history. So if you took capital gains last year, that was a more sure thing than what they might be down the road. So if you had a 15%, even some very high earners, 20%, when we could see capital gains in the 30s down the road. Now, we've probably got this great opportunity, and this is where we need to be looking. We do have a president not everybody loves, but the likelihood that president in Congress will likely keep income tax rates low for the next few years. So this actually could be a great opportunity. Couple of things going on. Market's down. Maybe we take advantage of that, reposition the portfolio while the market is down. Taxes are low. Maybe we do that. It's so counterintuitive, and people want to delay. But if you delay, making some modifications in your portfolio or making some of these changes, you could delay yourself into higher capital gains or higher income tax brackets. So that's where logic comes in. When you plant crops, as I was using before, in multiple places, you don't know which one's going to be the best.
Yeah.
You just really don't know. But whether you're diversifying your taxes by reallocating things in a good season like this, a good tax season, or reallocating your investment portfolio to be more durable to go in the future, that doesn't feel good to make those calls. But often it's the right thing to do.
Yeah. So if I was to think about it like this, you could have corn, as a crop. You could have wheat as a crop. You could have all these different crops. But when we think about taxes and tax allocation or tax diversification, you have tax deferred assets, taxable assets, and tax free assets for different periods of time and different tax periods of time. And I think what's happened is there's been this bias and general consensus of advice that many of our wonderful tax professionals have given over the years, which is tax defer, tax defer, tax defer yourself until you retire, and then you'll retire into lower rates. And, we're your retirement coach, okay? So we're working with people all of the time, every single day that are retired. And I'm going to tell you factually, that's not true. Many, 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 many of our clients retire into the same rates or higher rates.
Yeah. I think one of the things that's interesting is people who tend to be attracted to our firm and things that do the more comprehensive advice have lived below their means and saved well. They did what they were supposed to do, only to find out that they did so well that they're actually in, as you said, really in higher tax rates.
To do an episode about golf carts, kitchens, and bathroom models. It's the reality of it. And I think this is important because the tie-in joke would be like the chicken crossing the road. But really, it's like—
You want to do that joke real bad, don't you?
But honestly, it's more like the vintage video game. It's Frogger. And not only is it important to have a plan, be knowledgeable about what's going on, but having somebody to hold your hand and help you to keep that confidence. The first step, like we were talking about, don't sit on the sidelines. If you're in cash, you might be missing out.
Hey, at what age would people not know Frogger? Like how old and how young? Like you might just hit a one little group there.
Yeah, that might be 29 million people in Gen X.
Okay, well, that's what YouTube and Wikipedia is for. You can look it up if you don't have it. It's fine. It's fine. It's fine. But talk us through those next steps.
Yeah, well, and Aaron, I think from a tax perspective, so many people say they have maybe a retirement plan or a financial plan, but and I don't mean to be critical or judgmental, but really what they have is somebody's put together some portfolios. It's not really a plan. It's portfolio management. It is one of the rarest things I see is somebody actually coming in with a tax plan or a tax reduction plan.
Yes.
And I think for many of our clients and many of the people that are in our audience today, one of the most effective things that you could have is a 3 to 5 year tax savings plan put in place that identifies where you want to be with your tax-free or tax-advantaged assets 3 to 5 years from now and laying out a plan of how you intend to get there. And it doesn't mean you can't shift course because we don't know the future of tax rates. We don't know what's going to happen with our economy. We don't know about your health. There's so many unknowns, but at least you have a target and a direction and you're doing it intentionally. And I think that's one of the most effective and important things somebody could do in their retirement.
Yeah. Nick, one thing we might share in the future, I saw this chart and it was pretty interesting. If you go back to the 80s and 90s, much of the top companies, if we hear about the Magnificent Seven, all the technology companies, but if we look back then, they're almost all oil industry companies. And so as we transition through these different decades, what the winners are change. So that means uncomfortably having a tax plan that says, I probably need to reallocate my portfolio, not for what happened in the past, but what's likely to happen in the future, means that you may trade some positions that were great in the past that may not be great in the future. And I'll give you one little quick story. I remember having a client, and sadly she's passed, but when 20 some odd years ago, when she came to me, her parents had left her quite a bit of phone stock, all the Baby Bells and all the phone company stocks and that. And her dad said prior to his death, never sell these, no matter what. Don't let any joker, talk to you about that. So she was all in one sector and with 4 stocks.
Did she meet a joker?
She met the joker. And, it's a really bad thing because I am a people pleaser. I really do. But I do prefer to be competent over just bedside manner.
Yeah.
And what I said is, I said, I hear what you're saying, and historically those have been great, but they're basically distressed. And that means you're all in this one area, blah, blah, blah. And I convinced her that a diversified portfolio of maybe 1,000 positions or a couple hundred positions might be a safer bet to run through retirement than just counting on what had happened in the past, oil industry or tech industry or whatever it might be, that would take you through a more probable success. So she thought about it, and she finally gave me the okay to diversify, except for one thing that she didn't want to get rid of, one of her biggest positions, Lucent.
Oh gosh.
Oh, no.
So the reason I say that is, we did everything we could do. She was, compliant and getting diversified. But the one thing, that gut that told her, because it was the overperformer at the time. So it was, the technology version of what was going on there, but it failed miserably. And so again, wise counsel is being able to analyze that. And then if you've got your really competent doctor and you've done your research, or your financial advisor, your tax person, listen to them.
Yeah.
The great thing about being in the advice business is, if you own all Lucent, or you own a broadly diversified portfolio and we're helping you oversee it, our compensation's the same. We're on the same side of the table in winning. We do better, so to speak, if clients do better. If we grow their assets, we grow the firm. So we're tied on the same side of the table. But measure things in such a way that you really see the value in them. And if you don't understand, because our industry is full of all this different lingo that we tend to use without realizing it, ask questions. Don't be afraid.
Yeah,
Don't be afraid to challenge what you're being told. A competent advisor, doctor, or whatever should not be upset that you're questioning. I know someone in the family who asked a lot of questions to their medical professional, and within a week, they got a letter from that particular doctor basically firing them because this person took too much of their time and they didn't want to deal with them.
Oh man.
But that's real talk, right?
Yeah.
And that's a sad, sad state of being.
So we've swirled around a good bit. And one thing that I would love for us to draw a little bit more of attention to, because again, everybody gets it. When we're talking about the asset allocation, there's market risk, there's firm risk, there's tons of things that can rob your confidence. When we're talking about taxes, the tax laws are written in pencil, I mean, there's plenty of things. And who likes paying taxes? One thing I don't want us to gloss over, could we take another minute and talk about the things that can kind of paralyze us when it comes to estate planning?
I tell you what, Aaron, this is huge. Okay, this is huge. And I know, like Randy, I've had several clients over the years that they were gripped with fear and distress, and it kept them from making decisions to move forward with their estate planning documents, only to have something happen to them, or one of the two, if it was a married couple, and they died either intestate without a valid will, or with a really outdated trust, which happened recently. I think you're working actually on that case.
Yes.
And so, you can't let fear or being a chicken of updating your estate plan, trump the actual care of doing something, taking action. You're always going to be able to improve it. Yeah. You're always going to be able to edit, change, amend. But my encouragement to our audience today, start with where you are, not where you think you'll be 10 years from now, not where you think your kids or grandkids will be from 10 years from now. Start today. Plan as if everything is right now today.
Yeah.
And if you're working with a competent professional, then what's going to happen is you're going to look at that every year, and you're going to decide, is my relationship with my family the same? Are our economics the same?
So good.
Is our health the same? Do I have relationships with the stepchildren or step-grandchildren I now have?
Yeah.
Did we change, who our financial institutions are? You're going to take a look at that and then be able to understand, do we need to do some change of beneficiaries on our IRAs or life insurance? Do we need to go ahead and do a updated deed, like a quitclaim deed, to change the title from joint name to trust name? Right. Do we need to adjust because now we have a child who's adopted a child?
Yeah.
So start today. That's my encouragement.
Yeah.
If you start today, you keep review going, but you can always make a change.
So let me add two things.
Sure.
We're in the middle of settling an estate for a wonderful person that I worked with. And what I didn't know, and to Nick's point, is that this person had changed their bank account prior to the death. And so now again, it's not a big deal. It's not a huge deal, but where we could have avoided probate completely, now we're going to have to do probate.
A checking account.
And this is a wonderful person. It's just that importance of review. I know that we helped them put their bank account in their trust because it was a big deal, and we do this review and checklist.
Right.
But we didn't know that this person had changed their bank account. So that's one thing. The second thing, and I agree with you 100%, Nick, I think you're right on. But one thing that we've done as a firm, and we've encouraged the attorneys that we work with to do, is to add some discretionary flexibility where appropriate. Like if it's a circumstance where you can't have that for tax purposes, you've got a spendthrift, you've got somebody with a disability, et cetera, that might be one thing. But to the degree you can add some flexibility to have the administrative person, the trustee or executor or personal representative, look at the dynamics that have changed since the documents were created and make adjustments in the best interest of the beneficiaries. You know, I rarely see that kind of language in there. I always see things the way they are, and then if something happened, you have to go back and amend it and change it. And heck, half the people in our country don't have an estate plan.
Yeah.
So getting
better
them to
than
go back,
half.
better than they go back and change it. So anyway, I think you're hitting an extremely important part.
Yeah.
Yeah.
Well, to tie you onto that just a little bit, one of the comments and concerns I get back from clients, excuse me, is, Nick, this document, this trust has 138 pages in it, or you've got 90 pages. I wanted to keep it simple.
Yeah.
Right. Yeah. And what they might not be putting together, excuse me, is we're trying to add that flexibility that you're talking about that might not apply today, but could in the future.
Yeah. It's, very difficult to talk to somebody, and when you're asking them about their estate planning, I notice your financial power of attorneys are springing immediate, whatever. Was there a reason behind that? I don't know. That's just what they gave me.
I noticed that you have a primary representative, but you have no backup.
Right.
What if you and your primary in a car accident together?
Yeah.
So really doing that evaluation analysis, I've said this maybe 100 times, maybe 1,000 times, 90%.
Yeah.
This is kind of a ridiculous number, but 90% of the estate plans we review where the documents are pristine most of the time.
Yeah.
They still don't work.
It's a really sexy binder.
Really sexy binder. Nobody's bothered to do the changes to the assets and or language that would make them work. And it's sad. And I thought, in the early 90s when I got started in this part, the estate planning, that I wouldn't see this anymore. But we still see it today.
Yeah. It's not fun. And we understand that. But the reality is, if we've put in the time, done the education, paid the money, let's avoid probate if we can.
It's not fun to do it wrong.
Right.
Either. Yeah.
But I was meeting with a client yesterday where I had to explain to them, if you are sensing an urgency from me, it's because we do have clients that pass away in the midst of this. And I would much rather you wash the car today and it rained tomorrow. I love it.
And while most of our audience is probably in that older Gen X or baby boom, generation, it can't be lost on us. I mean, if you're in your 30s or 40s and you're listening to this, we're also talking to you.
100%.
And I think back to my health class in high school, and I remember this exercise that kind of freaked most of us out. They said, look in front of you, look to the person to your right, look to the person to your left, and look behind you. Statistically, one of you in the next 15 years will not be here.
Yeah.
Wow.
And I thought,
did they tell you who?
What?
Yeah.
No.
All right.
No, but my point of that is, we don't know our dates and times.
Yes. Or you're 21 years old, and the doctor looks at you like an adult, and maybe it's your parents that you want to be able to advocate for you. There is estate planning documents that are a part of what should be your plan. Like, it's really, I feel like we set the gate for this. All right, well, like you said, when I get in my 40s, 50s, I'll address this then. And it's too late for some of the things that you could have had in place. But again, that's not fun. And we do want to get to some things that are fun. And let's just hit them rapid fire, because the reality of it is there are some episodes that we can point them to. Take the Trip would be, if this tickles your ear a little bit when we hit these next bullet point, Take the Trip is going to be a great one. And again, email us at connect@yourretirementcoach.com, where we will set you up with episodes that kind of do a deeper dive, or we'll try and connect and do a future episode to kind of deeper dive. But just some fun things that we could absolutely be paralyzed and miss out on if we become big chickens.
Yeah. Well, I think, this is kind of exciting for me to think about the success of some of our clients, because we did the right thing in putting the plan together. They don't have to sacrifice taking the trip. They don't have to sacrifice blessing their kids with gifts.
Yeah.
They don't have to sacrifice traveling across country to see, they want to see the mountains. They wanted to see, the Sierra Nevadas. They wanted to go to wherever, Banff, Canada. Like, they don't have to sacrifice that because they did the right things today.
Right.
So they don't have to live in fear. They don't have to be the big chicken because they did the right thing. Yeah. So I would encourage you, if you have put together a plan, it's okay to execute your plan.
Yeah.
But for those folks that maybe you just have some investments out there, maybe, you've put together a portfolio, maybe you've accumulated an IRA here, a 401k here, et cetera, but it's not really a plan. Get a second opinion of what a plan actually could look like for you.
Yeah.
And then that might allow you to move more confidently to do some of these things, like having these adventures or being a living legacy today and blessing folks.
The living legacy, that's another one that's just such an incredible thing. Talking with clients about pulling legacy out of I have to die for this to happen into let's experience and feel the great feelings while we're alive. Just 3 takeaways from today that I hope everybody kind of pulls from what we talked about: to not lose confidence and stop making financial decisions. Partner with that wise professional, seek that wise counsel, and make sure that they are digging in, much like the doctor. Like, nobody wants to have blood drawn. Nobody wants to pee in a cup, but we want to get a thorough, good, assessment of where we are.
I got to tell you, if you find a financial planner starts digging in like a doctor, I think you got the wrong one. But.
No, but I want them to check my tax return. I want them to look at the balance sheet.
Advisor puts on rubber gloves.
Oh my God. So what you're saying is you have stopped taking those urine samples. Okay.
To take urine samples.
We don't want to sit on the sidelines and be riskier than taking smart, calculated steps when it comes to inflation, taxation, and of course, that last piece that was really great: retirement is meant to be enjoyed. Retire now, retire often, enjoy it, take the trip.
Fix the house up the way you want it, build a nest, enjoy it. And I'm thinking of a couple of clients that Aaron, you and I have worked with together, and we've shown them what they could take out of their portfolio, comfortably live, no worry of running out of money. And they think about it, they're blown away that they could do that because everybody else is just trying to get them to save money.
Yeah.
Nobody's telling them it's okay to spend it.
Yeah.
And then they come back and say, all right, I'll do half of that.
All right. So it was our inspiration for this episode. It has stood for decades. The big chicken here in Marietta. It has survived lightning strikes. It's been operational, inoperable, but it has always been something that people has used for that beacon of direction. And we hope you find good direction from this episode. We want to encourage you, as always, seek wise counsel. Interview some trusted professionals to help you not be paralyzed when it comes to your assets, to taxes, to estate planning, and take those good next steps forward. As we mentioned earlier in the podcast, we'd love to hear from you. Reach out to us at connect@yourretirementcoach.com. Let us know, hey, where can I find those episodes you were talking about? Or, hey, could you create this episode that I'm looking for? For those of you that are joining us on YouTube, as we've recently been informed, we are YouTubers. So I got to say it. Hey, smash that like button and hit subscribe. Now, you have to be logged in to do it, but we appreciate those things, and it lets you know when we are pushing out new content. And this year, more than ever, because of changing laws in regards to taxes, and we're talking about things like tariffs, we want to make sure that you stay current with what's going on in the current and in the evergreen scene. Thank you so much for joining us today, whether you're listening or watching, and we want to encourage you to stay coachable. We hope you enjoyed today's show, but you may have questions for our coaches, and they can be emailed at connect@yourretirementcoach.com. If you know someone that needs to hear this episode, we encourage you to share it. As a reminder, the content of this podcast is for educational and entertainment purposes only and should not be construed as advice. On behalf of our coaches, we want to thank you for listening and for being coachable.
Yeomans Consulting Group, a registered investment advisor YouTube channel based in Marietta, Georgia. We strive to provide comprehensive wealth management services for every stage of the journey. This platform is solely for informational purposes and is not offering advisory services or sales of securities. Investing involves risk and possible loss of principal capital. Comments by viewers or recognitions are no guarantee of future investment outcomes and do not ensure that a viewer will experience a higher level of performance or results. Public comments posted on this site are not selected, amended, deleted, or sorted in any way. If applicable, certain editing of personal, identifiable information and misinformation may be deleted. The opinions expressed herein are as of the date of publication and are subject to revision due to changes in the market or economic conditions and may not necessarily come to pass. This podcast was filmed at Podium Studios at Marietta Square. Grow your business with turnkey, professional quality podcasting, live streaming, and online events. Don't worry about editing. Don't worry about anything. Just come in and record. Learn more at thepodium.studio. Step up to the podium.